With us now, Yahoo Finance's editor-in-chief, Andy Serwer, to talk about what else? Jay Powell. I mean, finally, it's so exciting after talking about it all week. The Powell trade is on. Stocks surging to record highs earlier, although paring gains into the close. This after Fed Chair Jerome Powell set the stage for a rate cut later this month, pledging to defend the economic expansion from trade disputes and a global slowdown. Here he is.
The economy performed reasonably well over the first half of 2019, and the current expansion is now in its 11th year. However, inflation has been running below the FOMC's symmetric 2% objective, and cross-currents, such as trade tensions and concerns about global growth, have been weighing on economic activity and the outlook.
Cross-currents becoming Powell's favorite go-to, his signature word here. What was your biggest takeaway from the testimony today?
Well, first of all, I told you about 3K, that I was waiting for 3K. Remember just a couple weeks ago?
Yeah, you were.
Sure.
You were.
So
Did you get your hat out?
Yeah, no, I didn't do that.
And then you put it back away?
You know, I think that, boy, it was kind of stronger than I thought, unequivocal about, you know, his take on the economy needing federal bank expertise and help and assistance, central bank assistance. Yeah. And so, which surprises me. I don't necessarily agree with it, but there it is. And, you know, I think we're going to get a rate cut pretty obviously. And the market thinks so. And I thought the clarity was what surprised me. It was really kind of the most unequivocal that I've ever seen the Fed chair.
Well, I think, you know, as time goes on, we're able to get a little bit more perspective on what has in fact happened with the Fed and the moves they mapped out and the new regime, frankly, that we're in. And I think that that's a theme that should really be standing out to investors, kind of hammered home today, but certainly has been in play for the last couple of Fed meetings. And that regime change is the shift from a classic Fed, which sees the economy as sort of a stylized model, and they react to the economy. So, you know, if certain variables go certain ways, you get certain outcomes, right? This is all the stuff that Bernanke and Greenspan and others, Janet Yellen, were doing as macroeconomics professors. But Jay Powell, I think, sees the Fed having a more active role in managing the economy, elongating cycles, and along with that comes a fearlessness to be a little more creative with policy as a way to impact the economy directly rather than wait for the economy to happen.
I think you're spot on, Myles, and I think the danger is that the market has become a seemingly very significant metric to Jay Powell, which is
like
very
the triple mandate?
Yeah, right?
Yep.
And the other thing that's also shockingly new is global growth and outside of the U.S., which is something that, you know, heretofore Fed chairs have certainly not expressed overtly as something that they would consider when it comes to changing Fed policy. But I think we're seeing that here. And then, of course, you know, the rate cut, how big it is sort of the last drama.
And that speaks to the creativity maybe that he might be able to explore here. So the idea, I mean, right now most people are expecting that quarter point, but we do have Morgan Stanley out still saying that the Fed could cut by 0.5 percentage point. And that would be a very different playbook, but maybe there is a theory, look, maybe we try and get them to expect the quarter, so then the 50 will actually do its job versus just getting what the market expects and having a negative reaction. Well, what do you make of that? I
mean, I think we're going to get a 25 basis point rate cut. And I think the reason why is that 50 would send a signal that they need to be more forceful at this moment, whereas Powell has actually been quite patient. If you think about it, I mean, in hindsight, it becomes clear that by April, he was sort of looking at this thing saying, I think we might have made a mistake here. I think we might have not done the right thing by raising rates 4 times last year. And that is now 3-4 months in the past. And then we'll finally get an undoing of what happened at the end of last year. Probably we can say, with the benefit of hindsight, December was a mistake, right? They screwed up at that point. So I don't think you want to go 50 to say that, oh, well,
we really screwed up.
Yeah,
no.
I mean, I think 25 is basically saying we are going to, we're going to be measured, but we're also not going to be afraid. We're not going to wait. And I guess to the point, Jen, on the framing you had about trying to set up expectations. I mean, I just think like that whole thing, which we all became very adept at discussing, that Fed market dance, I don't think that's the way Jay Powell sees it. I think he looks at the market and says, oh, the market is telling me this is what we should do, and I agree, right? I think the Yellen Fed was much more of, we would like the market to behave a certain way, then we will act on that basis. Whereas, dog tail, right? I think Powell's okay being the tail.
And this goes to the idea the market's telling him what to do.
And he agrees.
And he's going to do it.
Hey, guys in PE, he knows the market, usually right.